the real IFRS and IAS discussion is going to continue. So please pay good attention, more than what we had in the previous class. Previous class are like elementary discussions, basics. And number 2, I'm going to share certain questions to Mr. Siraj today or tomorrow. These questions are from the discussions we developed in the previous 2 classes. So, and there is no mandatory requirement for anyone to do, but if anyone want to try, please do that.
No, do it.
It is up to yours.
Do it, okay? Because anyway you have to still read the note to do it, no problem. Refresh it and do it. It's not an exam.
Knowledge upgraded. So once you've done the answers, if you want me to correct, I will send it to me. Otherwise, next week I can share the answers also. So from today, we will now go on to discuss about a complete discussion when accounting would have started.
Sorry?
Think now when the business would have started. Any idea? What do you think when the business would have started? Or what was the form of the business at a time when we didn't have money as a form of medium of exchange? And that time, as Mr. Siraj, knowledge growth all taken place. People started commuting from place to place within their own country. For example, if you are, let's say if you are in India, you're from Tamil Nadu to Mumbai, it's a very huge distance. And those days, I'm talking about thousands of ages before, people never thought of commuting between the places. But then they later found the medium of transport. They had transportation mechanism, like they used the cow, horse, donkey, and so on. And then this has grown into different magnitudes. And then later everything integrated, connected, helped to grow the environment to such a situation when we are reaching now. Nowadays we name this information age. During this period, we communicate with country to country within seconds. We travel kilometers, thousands and thousands of kilometers in hours. So all that helped throughout this process. The second invention is money. When money has come as a unit of measure for the transaction, the people's doing the transaction became more easy. I don't need to compromise all of my sheep to get 2 kilograms of rice. I only need 2 kilograms of rice. I had to give 1 sheep. Very unfair. So later, then this economy has brought us the medium of measurement, the money. This helped us to develop. And then gradually, people started thinking of recording. We talked about Luca Pacioli. He came and said, okay, my friends, every single transaction has a twofold effect. So that you have a debit entry and a credit entry. And then every transaction you please record in this manner. And then later, like-minded common people together started developing some good practice to record the transactions. Now, for example, I am from Philippines. In the transaction that I will record there will not be same as if I am from Sri Lanka. The way that accounting transaction that I will record there may not same. It will have a not a uniform practice. Then that time there is no thinking of having a single language of accounting. That is what happened in Sri Lanka. We record our transactions according to Sri Lankan accounting standards. Similarly, if I bring that example for Philippines, I believe that is the same. So later what happened? A Sri Lankan gentleman need to travel to China to work in a company established by US. And then this company suppliers are from German, suppliers are from England, and they have customers from Saudi Arabia, Qatar, Dubai. Then, in order to make everybody understand the accounting transaction for all of this, we discussed about the stakeholders. We needed one single accounting standard. That accounting standard only, we call it as International Accounting Standards. Formerly, we didn't have financial reporting standards. We only had International Accounting Standards. At that time, the accounting standards are developed by a body known as International Accounting Standards Board. In short, we call it IASB. These IASB are the responsible body in developing every single new standards. They started developing standards from IAS 1, and then they went on to develop 2, then 3, 4, 5, and it has gone up to IAS 41. When they reached to IAS 41, the thought process changed. The thought process changed, and then they said no more accounting standards. It is now that financial reporting standards. To give a small idea behind this, at that time people thought accountants are just number crunchers. They know only debit and credit. They add all, subtract all, find out the answer, bring to the owner's table. Now they say no, you are not only an accountants. We don't need accountants. We have Excel, we have accounting softwares, we have everything. What we need from you, an interpretation skill in receiving the accounting answers. You report them. You don't account them, you report them. And then you interpret this and then give interpretative output to the decision makers so that they can make their decisions in a fruitful way. I hope this clarifies in a very clear manner. That's how the accounting standard started developing. Next point